Hello and welcome to another Phoenix Housing Update. This one is for mid-May 2020, and trust me, I know things are a little funky right now, but I am here to try to make a little bit of sense out of what you might be seeing as far as the local housing market goes. So I'm Dylan Bucknavich. I'm a realtor with the Buck team at North&Co. I am also a husband, a daddy, and a former home inspector. All right, let's get started. So actually, as I was finishing putting this together, I found out that Arizona has just lifted its stay-at-home order. Of course, the news came right when I thought I was completely done with the update, so that will definitely add a little bit of a twist to this whole thing. So, all right, is the market up or down? Is it a seller's market or is it a buyer's market? What's happening to sales? What's happening to prices? Well, one thing I can say for sure about our market right now is that it is very condensed. We have a lot happening in a short amount of time, especially if you look at the four following stats. Look at closed sales, accepted contracts, home showings, and seller concessions or paid closing costs. Let's start with sales and new contracts. So if you just looked at the number of closed sales, we had a 31% drop from March to April. 31%. Based on that, I'm sure you'd assume that things are declining rather quickly. However, if you followed another stat, weekly accepted contracts, you would see that new contracts dropped 39% over a span of 6 weeks from March to mid-April. So it was obvious that sales were going to be low. Now here we are today. Sales look low, but how are those accepted contracts coming along? Well, over the past 4 weeks, there has been a 40% increase in the number of accepted contracts. 40%. So as you would expect, the closings that are going to come out of this rush, they won't even be official and reported for about 6 more weeks, but they're coming. And at that time, when they get reported, you guessed it, sales will be up dramatically. So on a side note, the biggest hit to accepted contracts was in that $500,000 and above price point. That price point alone dropped 58% in contracts. So it rose around 60% over the past 4 weeks, but it's still down 30% from its peak about 10 weeks ago. All right, so let's get to home showings. That's another great stat. You can follow to see how things are actively trending, especially with buyer activity. So what's interesting is I started to feel an increase in buyer activity a few weeks ago, and then I saw a stat on showings, because luckily we're able to track showings through something called showing time. Now, their report tells us that showings peaked around March 5th at about 16% above normal. Then went into a dive for about a month. About April 6th, it bottomed out at 40% below normal activity. That's a nice 56% swing. So today we're at about 3% above normal, another 43% swing. So that is screaming at us that demand is increasing sharply. And now let's bring in our twist of the stay-at-home order being lifted. So it just so happens to come at a time that California's stay-at-home is extended. So I'm sorry, I know I don't love to make predictions, but there is no way that doesn't create more demand here. And I say that because before we even got locked down, even going back to last year, I was already seeing Californians make up a good 20 to 30% or so of my traffic at open houses. So, all right, seller concessions or closing costs. So far, everything sounds like bad news for buyers. So let's brighten that up a little bit. We have been seeing fewer cash buyers, and as a result, fewer as-is offers where sellers don't have to make repairs. So with that on the decline, we're seeing sellers offer more towards the buyer's closing costs, seller concessions. And those rose from 18 to 25% over the past 4 weeks. The strange thing is with what I said earlier about that steep decline in new contracts at $500,000 and above, you'd expect seller concessions to be high in that price point. Instead, we saw the largest number of canceled listings in that price point. That dropped supply and it actually offset the loss in demand. So prices there are stable for now. But regardless, I would imagine once sellers catch on to the amount of new showings and newly accepted contracts on a week-to-week basis, concessions are going to decrease again. Okay, we have to talk rates for a second. And so I talk to and work with a lot of buyers. And the last thing I want to see, and it's because I've been seeing it over and over for the last 2 and 3 years, is buyers holding out for sales and prices to crash, only to be disappointed over and over again. So the issue now is while people are waiting around thinking that's going to crash, we're experiencing mortgage rates in the low to mid threes. The average is 3.26%. So by the time the news of increased sales comes around and buyers realize prices are once again not going to drop, rates could very well spike back up and boom, you're suddenly forced to buy less house for your money than you could have bought just a month before. So in addition, now you're going to enter the market with a flurry of other buyers who realize the same thing and now throw in the California migration, which I am officially predicting. So I'm sure you're aware, rates matter. Like they affect affordability even more than you think. So here's an example. Even though we had appreciation and the median sales price rose about 9% over the last year, since rates are at 3.26 today, and they were at 4.1% this time last year, so the principal and interest payment on a $300,000 30-year fixed rate went from $1,450 a month last year to $1,307 a month right now. That's a 10% increase in affordability, even with appreciation. So in conclusion, the story now, which could of course change, is that our local housing market took a direct punch from COVID-19. It staggered, it stumbled, but it never fell down. And it's even starting to punch back. That's how strong our market was for sellers and how out of whack supply and demand was. Even a global pandemic didn't beat it up too much. However, I'd assume there are more punches coming. One thing I'm really trying to pay attention to is the effect of this record high unemployment rate we're seeing and what that's going to do. But I imagine there's going to be quite a lag effect and we're not going to find out for a while. So once again, to stay in front of things, you have to pay attention to a few streams of data. You have the lag and the lead data, all that funky stuff. But if you don't want to, I'll do it for you. Never fear, I'll be over here paying attention. So feel free to fire away with any questions. I appreciate you taking the time to read this, and I will see you next time.